to the Money Effect, where I bring you all topics finance and money news related. Just a quick disclaimer, this is just for educational purposes and not financial advice. And as usual, now that's out the way, let's go. So, what I want to talk about today, um, just want to discuss what's going on in the markets, particularly around, the main theme that I feel is going to be important this year is going to be interest rates and obviously inflation, because interest rates are going to be used to bring down inflation. So last week we had a Federal Reserve meeting, and leading up to that in January, we've had, probably one of the worst months. A lot of the stocks have been selling off. You've been seeing a lot of, people on YouTube, analysts, even, uh, financial broadcasters all saying, okay, this is the start of the great collapse. Or in technology stocks, there was a big rotation from the value stocks um, to the value stocks. So with COVID coming somewhat under control, a lot of the growth stocks, there was a movement in there. We've had obviously we've got inflation, which means interest rates going to go up, which is what I'm going to talk about today. Obviously, we've still got some external factors like Russia, all affecting the stock market. So I just wanted to discuss because over the past week since the Federal Reserve, the technology stocks have actually gone up. And why have they actually gone up? Because last week the Federal Reserve, they said we're going to start raising interest rates in March. And now you may ask yourself and say, oh, okay, but you said when they raise interest rates, stocks are going to sell off. So why is it that as soon as he said we're going to raise interest rates, um, the stocks are doing better? And that's because the market works on expectations. And right now, the market is expecting that the Federal Reserve is going to raise interest rates. They're going to raise it at least four times, and it potentially could be aggressive. So that's why a lot of things have been selling off. Now, if the Fed chairman Jerome Powell, he's come out and said, yeah, we are going to raise interest rates. Now he's still using this word transitionary, talking about supply chain issues around inflation. So that's important because I guess until he takes that kind of language out of his tone, the markets won't be even more scared. But he's still talking about that. He's saying, yeah, we're going to reduce the balance sheet, and then we're going to start interest rates. But he's saying it's all going to be organized. There's no need to panic. Interest rates are going up, and I think because he's saying that, the markets are thinking to themselves, okay, this is basically what we expected. Actually, they expected worse. And until we get to the point where inflation gets rampantly out of control, which I do think is going to happen potentially, and the Federal Reserve has to now start doing raising interest rates. I'm talking about maybe raising 6 to 7 times a year, and if they do that, then the stock market will just collapse, especially these growth stocks. We're still at that point where everything at the present moment is being priced in. So these interest rates are not, a lot of these stocks. Like I said before, when things are on sale, people tend to, if you see a bargain, you go out and buy the bargain. But when it comes to stock investing, because of the psychological behavior, when people see a sale, they think, you know what, this is time to either sell at a loss, or they don't do anything. And then when all these stocks go up, that's when suddenly all the fanfare comes in and people start buying, and that's when other people start selling. So interest rates are going up, but at the moment it's kind of been priced into the market. So unless we get any inflation gets rampantly out of control, the Federal Reserve raises 6 to 7 times. I think they've scheduled in 3 to 4. The market's expecting 4. We could see now a kind of bottom in these growth stocks. Now, what kind of stocks am I talking about? Now, I think, we've got Apple here. Apple's popped on fourth big quarter earnings. I think any kind of stock that you're looking to get into that has, you know, um, earnings, you know, any kind of stock that you're looking to get in, like we can see a chart here where, Google was and where it's going. Any kind of stock that you're looking into that has earnings, and these big tech names, the main ones you're going to be looking at: Facebook, the Amazons, the Googles, the Microsoft. Microsoft beat earnings again last week. These are actually companies that have assets that are producing, making profit, have multiple cash flow. These are not going to be affected so much by interest rates. When we've got these other companies that are not making money, like the Robloxes, the Neos of this world, those companies, they're not making money. So obviously, when interest rates rise, they're very speculative companies. They're calculated using discounted cash flow methods. Those methods use cash flow. These companies are not earning cash flow, and they're very sensitive to interest rate rises. So if we talk about big companies like a Google, perfect company, this is at a great price now. They've even announced the stock split. And if you remember when Tesla announced the stock split, I think maybe the price might go down a little bit more. But if you look at the Tesla picture when they announced their stock split for the next year or so, it just kept on going up. So again, you really got to discriminate between traditional growth stocks, which are those companies with no um, cash flows, and these big companies like Google. That's not like a small company; they're generating money. Again, AMD, another company that's rises 10%, good earnings, good strong outlook, same as Microsoft, and then we've got Facebook and Amazon to come. So you're going to see a lot of those companies, pick up, and Fangs, or obviously they don't use Fangs now because F was Facebook, it's now Meta. They've kind of been downplayed a lot, but in my estimation, they're still good companies to get in, and they're great prices now. So definitely make sure you're having a look at those. But in the back of all that, we've still got inflation, and this is just a Google search, so in inflation, and you can see, look, all the articles that are coming up. We've got shop prices rising. That's the big one today. If people didn't know that already, inflation in the eurozone is still going up. We've got inflation and the central bank. So we have still got this inflation playing in the background, and unless the central banks are going to say, okay, you know what, um, unless it is transitionary and it is supply and chain issues, this is still going to go up. So, you've got to really still pay attention to the inflation cost. You still got, to traditional ways to play inflation. Me personally, I'm still looking at the miners. If you want an investment trust, look at something like BlackRock World Mining Trust. The banks, individual banks, or again, Polar Capital Trust, again, that as a bank. Those things where interest rates will help them. And of course, real estate. If you've got property, if you've seen the property, you're searching for a property, you've seen the price of property, that's definitely a good place to put your money, or real estate trusts. So this inflation play is not going away this year. Yes, the markets have somewhat picked up since the falls in January, but inflation is still there. So I'll still be diversifying my portfolio with these inflation plays, with the banks, with these miners, with the real estate, and also then start looking at big tech again, which is at good low price. Not only big tech, there's other good tech companies that are making money, like CrowdStrike, for example, cybersecurity company. We're hearing that if Russia does go to war with Ukraine, the first step is going to be a cyber attack. So that is part of modern warfare now. So again, those are the kind of good companies you want to be looking out for. All these other speculative companies like the Robloxes, like the Tilrays, DraftKings, all these companies, they're not making money right now, and they're at such dirt cheap prices that you could potentially start getting a portfolio together, and which is what I'm doing, and start investing in this money. Even if it's every month and you're willing to hold it for 5 years, then fair enough. But if you think that those companies can't go back to their lows, then and you're putting in big money now, might not necessarily be the best choice. And then on that, now we've got Bitcoin. So obviously, Bitcoin has been, and just in general, crypto, but we'll stick to Bitcoin. Bitcoin, it's changed its narrative many a times, and now it's being seen as an inflation play. It had a big sell off again with all these stocks. When all these stocks sold off, particularly you can see in January, had a massive sell off. So this is now 20% down in a month. Why did it have a massive sell off? Because it was moving in line with the growth stocks, and saying inflation is going to get rampantly out of control and Bitcoin wouldn't be able to handle it. Now, if inflation is just moderately in control, then I think cryptocurrency, particularly Bitcoin, we're not going to touch on the other cryptos like DeFi and things like that, but cryptocurrency in terms of Bitcoin and the inflation play stage is still go for me. And as you can see, if we look at the past week, you know, as in line with everything else that's rising, it's suddenly be creeping up. So if you're somebody that's looking to, get into Bitcoin and you didn't get in at the top, now potentially is a good time to start stacking. Now that doesn't mean any of these things are not going to go down further, and I still think that potentially we are going to get a big sell-off sometime this year. But I think right now, if you have funds accessible and you're looking for a correction, then start looking at, if you was looking at Bitcoin before, it's a good time to again start looking at it now. And like I said, Bitcoin, it's with the inflation play. If inflation is controlled, if inflation is going to 7-10%, then okay, the target is 2%. If you've got inflation at 4-5%, then Bitcoin will be good because it will be seen as a store of value for people to put their money there. It doesn't get eroded by inflation. But if it's going up to 7-10, inflation goes up 7-10% or whatever, and interest rates start going mad and have to get rapidly increasing, then likely Bitcoin is going to sell off with everything else, which is what happened in January. So yeah, that's what's going on in the markets now, and just pay attention. The inflation play is still there. Yeah, and it's the money effect. Hope you like the channel, like and subscribe for the algorithm, and I'll speak to you soon.